Hey guys, it's Trader Moha. Happy New Year. I know it has been a very long time, and I know you guys missed me a lot. I'm here to apologize for that. So, what actually happened was I was working towards improving my video and audio quality, whereby I got some certain tools which will aid me in improving quality of my video and audio. So that's actually what happened. So let's get straight to the point. Actually, I took a trade today on USDCAD. USDCAD. So I'll be giving a breakdown and review of what I actually did. So what actually happened was, how I took the trade was I zoomed out to my daily time frame. So when I zoomed out to my daily time frame, I saw that price was inside an imbalance. That's a fair value gap. You can all see this is a fair value gap. So, and the fair value gap was actually filled on Wednesday 11th February 2026. You can all see it. This candle was the candle that filled the fair value gap as Wednesday 11th February 2026. So actually, if a fair value gap is filled on the daily time frame, whether it's a bullish or bearish fair value gap, I expect at least the next 3 days should be either bearish, that is for a bearish fair value gap, or bullish, that is for a bullish fair value gap. So actually, this place with this in this scenario, this is a bearish fair value gap. So I'll be looking for sales, which the third candle was today. It's today, Friday 13th February 2026. So as I saw that, I zoomed out, I went down, I went lower to the lower time frame. I went to the lower time frame since I know my bias is to be looking for sales. So I went to the lower time frame. I checked the 4 hour time frame. I didn't see anything. As you all know, I come to my the lower time frame to mark out my kill zone because in the kill zones only indicates in the lower time frame from like 30 minutes, 15 minutes, 5 minutes, and 1 minute time frame. So I marked out my Asian range, which is the Asian high, the Asian close, and the Asian low. As you all know, this cycle here, this red shaded area is the Asian range. So I marked my Asian range. So you could see this blue is the London kill zone, while this is the New York kill zone. As you know, time works with price and price works with time. So during pre-London, you could see around 6:30 a.m. that is Nigerian time. We all know that the daylight savings is currently on. So session times normally changes when this daylight savings is on. So price swept Asian high around 6:30. You see around 6:30 this candle. So it's something I have included now in my strategy, because along the line when I was not dropping my breakdowns here on YouTube, I was actually modifying my strategy. So you could see price swept the Asian range, and I wait for a 1 hour candle to close. You see this candle closed. It closed. So as it closed, I waited for since the Asian high is the main point of interest. I waited for the 1 hour candle to close. You see, I marked out the DRF high. This is a 1 hour high in just simple terms. So you could see as the London session opened, price actually around 8 o'clock. That's when London session opens here in Nigeria. So you could see that price swept the PDH, that is previous daily high. So as I saw, there was a morning star here, and on the 1 hour too, there was a bearish candle closure which was closing below. I just entered for shorts. You see, I shorted here, and my initial stop loss was around 11 pips. I added, you guys know I normally add 2 pips to my SL, my initial SL, 2 pips or 1 pip. It just depends on what I see for the day. So you could see price hit only TP1, which is about, let me indicate, it's about 2.09, but I normally take profit 1 at 2 RR, so around this level. So then price reverse to PE, which stopped me out, because I know as price hit my TP1, I move my SL to PE, and then leave the trade to be risk free. So on the second trade, before I explain the second trade, the only thing I just modified in my strategy is, let's say for example, let me give a brief explanation. Price is on a key level. In simple terms, liquidity. And this liquidity is an actual high. Sorry, don't mind my handwriting. So I wait for the 1 hour candle to sweep this high, and we know each candle always has a wick, and I wait for the high of that 1 hour candle to get swept, and the candle closure below here, below the 1 hour candle wick, high wick, then I enter for short. So it's very simple. That should be the opposite for low. For the buy scenario, you just wait for the 1 hour candle to sweep key level, and you mark out the week low, and you wait for price to sweep it, and then you buy. You wait for the claim above it, then you buy. Just simple as ABC. But it has a certain context which you use it, where you are to use it and where you are not to use it. So along the way, you guys will learn more about it. So let me briefly explain the second trade which I took during New York, because now I normally split my risks into like 3 places or 2, depending on how busy I am for the day. So I normally go to work. So let's say for example, I have a risk amount of, let's say, let me give a brief explanation. Let's say about $150. Right? So I split my risk into sorry, let me use the text so that you guys will understand what I'm explaining. I split my risks into 3 sessions. That means $50 per each session. That means during London, I will risk $50. New York, I will risk $50, and then London close, I will risk $50. So this, since we know trading is all about probabilities, this gives you an edge in the market. It gives me an edge in the market. So let's say for example, I took a trade in the London session. That trade was a loss. I I left London session alone since I've taken a loss. Come back during New York, I won that trade. You see, since I'm targeting for a 3 RR, I'll be making something like, let's say, um, $150. And if I win the next trade, which goes during London close, that means I make something like roughly around $250 or so. So if I win two trades, if I lost two trades, sorry, in a day, and I win one, I'm profitable for that day. I recovered my loss and I made profit. So you just have to give yourself an edge in the market. Understand what is working for you, and also along the way try and make sure learn from your losses. The main goal is to improve. The main goal is to improve and also maximize your wins, minimize your losses. So let me briefly explain, give you a detailed explanation of the second trade which happened during New York. So you could see there is an actual fair value gap here. That's a 1 hour fair value gap. We are on the 1 hour time frame. There's an actual 1 hour fair value gap here, and we are looking for sales. Because mostly I was anticipating for the whole day I was actually anticipating for the whole day to sell. So there's a 1 hour fair value gap here. So actually, like, redefine the fair value gap, like look for confirmation inside the fair value gap. I switched down to the 5-minute chart, and I saw, because normally on a certain day, or most of the time, I normally define or look for confirmations on high time frame fair value gaps. So you could see on the 5-minute time frame, there is a trend line liquidity. I use the line chart to identify a trend line. The trend line liquidity. Let me mark it out for you. You see there's a trend line liquidity. This is where it tapped. There's a trend line liquidity which was tapped at least 1, 2. Let me zoom in properly, sorry. You guys can see what I'm saying properly. So you could see there's a tap of the trend line 3 times. 1, 2, and 3. And then we know that the trend line must have the liquidity sweep, which is number 1. You can see the liquidity sweep here, and it must tap the trend line 3 times, which it has done. And then for the rest, it must break out at least a candle closure below trend line or above. You see, as price broke out of the trend line, a bearish candle broke out. You see, I sold, entered for sales. So I placed my stop loss above this level, because there was actual liquidity area here, which was the 30-minute. You see, let me zoom in properly for you to see what I'm saying. You see this level, there was an actual imbalance at that level. So I placed my stop loss at the low of the fair value gap. At the low of the fair value gap. And then I targeted for a 3.8 RR, which you see price talked me out and started consolidating. No, trading is all about probabilities. Not every time you actually just get the reason why you took a loss. Sometimes it's just the market doing its thing. You don't need to blame the market. Just accept your loss and move on to the next trade. So this is actually where I'll stop. Before I go on ahead, please kindly subscribe to my YouTube channel, share the video to your friends and family, and also like the video. Of recent, I created my Telegram channel, which you will find the link in the description of this video below. Please kindly join, and also I'll be in the description of the video. You also get a link where you will find You will find all my social media handles there. You can follow me and learn more about trading. Also, you can DM me on Telegram if you have any questions or you are confused on related any trading related issue. Thank you and have a lovely day ahead. Goodbye.